Hello everyone, it's Friday, December 12th. And today we will explore the charts for the euro and the British pound to identify potential market trends. Yesterday, both the euro and the pound continued their upward momentum against the US dollar, which faced pressure following the recent Federal Reserve meeting that suggested further policy easing. The greenback was also weighed down by disappointing initial jobless claims, indicating that the labor market remains under strain. The status supports the Fed's decision to prioritize steady labor market growth over combating inflation, which had been its focus earlier this year. In addition, the US reported a significant trade deficit, largely attributed to trade tariffs imposed by Donald Trump. Now let's take a look at today's macroeconomic calendar. It features a batch of statistics from the UK, including GDP growth, industrial and manufacturing production, and trade balance figures. These reports could significantly influence the direction of the pound. The primary focus will be on the UK GDP growth rate for October, which is expected to rise by 0.1% following a 0.1% decline in September. Notably, the UK economy has struggled to show positive momentum since July 2025. It registered zero growth in both July and August after 0.4% increase in June, followed by a contraction of 0.1% in September. Quarterly figures also paint a bleak picture, suggesting that the Bank of England's battle against inflation could ultimately lead to a recession, which is an unfavorable outcome for the central bank. Regarding data from the euro area, today's agenda includes consumer price reports from Germany and France. These figures may impact the euro only if there are significant deviations from the expectations. However, given that the European Central Bank is close to achieving its inflation target of 2%, these figures are likely to align with forecasts. In the United States, the macroeconomic calendar is light. Traders may take notice of remarks from Fed officials Beth Hammack and Austin Goolsbee to learn more about their thoughts on the recent FOMC rate decision. Whether the market reacts will largely depend on how their comments differ from the decision made on Wednesday. Turning to technical analysis, the 1-hour EUR USD chart indicates that false breakouts at 1715 and 1684 may present buying opportunities. Going long on a rebound would be reasonable at 1649 with a target of 30-35 pips. Bears are likely to come into play around 1.1748. A false breakout at this level could drag the euro down to 1715 and possibly set the stage for a deeper correction as the week comes to a close. Conversely, if the price breaks through and consolidates above 1748, the euro could reach a new one-week high, rising to 1777, and potentially up to 1817. At this level, it would be recommended considering short positions on the rebound targeting intraday correction of 30-35 pips. Short entries at 1748 and 1777 should only be taken following a false breakout. Speaking of the British pound, a false breakout at 33.96 following the release of UK GDP growth data could trigger a sell signal, potentially dragging sterling down to 33.55. The more distant target would be 33.20, where I would be wise to consider opening long positions on the rebound targeting a move of 30-35 bips. Long entries at 33.55 should be considered on the false breakout. In a bullish scenario, if the price breaks above 33.96, driven by positive UK statistics, the pound sterling could rise to 34.34, with the potential to extend gains to 1.3468. At this level, it would be prudent to consider short positions on the rebound, anticipating a 30-35 pip move. Going short at 34.34 and 33.96 would only be relevant after a false breakout. Good luck to everyone and have a great weekend.